First of all, I'd like to say thank you very much to Marty Crouse from Phoenix Financial for joining us, taking some time out of his very busy schedule, from what I hear. And so, Marty, why don't you take a minute and tell everybody about yourself and a little bit about Phoenix?
You bet. Thanks, Greg. Thanks, Amanda. My pleasure to join. I've been to several of your meetings when they were held in person back in the good old days, but happy to be here on video conference as well. Phoenix Financial is my company. I started it close to 8 years ago, and I do what they call private mortgages or privately funded mortgages. You've probably heard a couple different names for it. The whole point to privately funded mortgages is to help people who can't quite get approved through regular means, i.e. banks or finance companies, that type of thing. It can be any number of reasons why they can't get approved. Yes, a decent chunk of them are credit issues. As I like to say with credit, nobody really knows exactly how credit works. I think it's kind of like the caramel secret. We all know it's there, but we don't know how it got in there. So it's kind of mind-boggling sometimes what credit is, how you get to a 650 plus credit score. We all know the good habits, but how fast it gets there and what really helps sometimes is a bit of a mystery. So sometimes it's credit issues. For other people, it might be self-employment where their income isn't quite matching because of things getting written off, that type of thing. Also for investors in the group who have a lot of what they call doors. If you have a lot of doors, banks don't like you. As regular investors, they want you to be, a commercial investor, that type of thing. So as a residential investor, once you get past, I think it's what, 6, Greg, normally is kind of the threshold. Yeah. For doors. That's when banks really start to put the crunch on you. So I can help out in those aspects as well for investors. And sometimes it's simply people that are looking to do short-term funds to flip a house as well. I've done several of those, and getting financing from a bank to do a flip can be very challenging as well. So that's basically it's a short-term fix for people who want to move from point A to point B. Other people have called it bridge financing as well. So it's essentially that, if you're familiar with that term as well. So.
Awesome. That's great. It's a nice high level look at it. So let's take a quick look at the investing side. So sure. Basically, if I'm an investor, I'm coming in, I'm meeting up to you. Probably my first question for you is, what is the minimum that I would have to give to a company such as yours to get into that investing game on the private side?
Excellent question, because that is asked by every single investor I've ever had. It even was asked by me when I first started. What do I need to do this? It can start anything. I tell people, if you've got $5, we can invest it. Are you going to see much in return from $5? No, it's not really going to be worth your effort. But my smallest investor I've ever had started at $10,000. When his first one came due a year later, he took his interest plus he doubled his principal. So he invested almost $22,000 the next year, and has grown ever since. So there is no minimum number per se, but if you invest less than, I'll say 10, you don't see a whole lot of return for your effort. I'll say it that way.
Yeah. I mean, that's kind of how I started investing through your vehicle, was a lower amount, and then it just grew over the years as you kept proving yourself over and over again. I guess probably the next question you probably get asked a lot is, what's the risk involved? Because it almost sounds too good to be true. So what are the risks?
You bet, it does. And for any of you who have heard me speak before, or who know me personally, or who are investors with me, I talk the risk up. I don't want anybody to be surprised. There is risk. Anybody who says there's no risk involved in any kind of real estate investing is lying or doesn't quite understand what they're doing. Because there's definitely a risk. There is always a risk that someone can not pay you, and then you have to foreclose on their house. That risk is mitigated by a couple different things. One is you have their house as security. That's number one. This is a mortgage. It's the same as doing a mortgage at a bank. They can't sell their house or do anything else with it unless you sign off on it and get paid for it. The other thing that I do, and a lot of private lenders as well, I'm certainly not the only player in the game, but I don't invest any more than 75% of the value of the property. Very simple numbers, including fees. If you have a $100,000 property, I will not give you any more than $75,000 as an investment. The reason for that is if something does go wrong, then I'm able to, or you're able to, if you're the investor, you're able to liquidate the property and discount it down to, let's say, 80,000 and get rid of it quickly. You don't have to sit around trying to get $98,000 out of a $100,000 house. Especially if it's in an outlying area. Any of you real estate agents or investors in the group will certainly know that sometimes that could be a challenge trying to get your money out of something that's a little bit further out from metro. So that's those two things mitigate risk. The other thing I personally do to mitigate risk, and we'll touch on this a little bit more as we go on as well, but I meet everyone that I do business with. I don't do just phone interviews or anything like that. Things have changed a little bit since COVID times. I have met people in parking lots. Sounds weird, but I have. But I've done that. Plus, I take a look at the property. A lot of times it's an appraisal. Sometimes if the loan to value is very small, I may not get an appraisal, but I certainly will go to the house. Even since COVID, I've still put on a lot of kilometers going around the province. I was in Amherst last week. I've been out past Sheet Harbor. I've been around the past couple of weeks. The kids are enjoying me drives in the back of the car with the iPad. So I go and take a little bit of a deeper dive. I know not every private lender out there will do that. And I'm not saying they're doing it wrong. I'm just saying this is the way I do it. So,
yeah, what I find, that's awesome that you do that, and it gives you that small brokerage type feel. A lot of the bigger private lenders, you're dealing with somebody who has no idea where the property is. It's just a numbers game. And what you do differently from what I've seen is you get down to the personal aspect and you find out what that person is all about. You are a very good judge of character with your background in banking and customer service. So that when you call me with an opportunity or other investors, that's the warm feeling that I get, that you say, okay, this person has struggled. We can actually help them get past this hurdle. But you would only know that if you go and meet them in person. So that's really awesome that you do that. And you're right.
Sorry. I often get things sent to me by brokers that simply are just numbers mostly. And I'll always go back to them every time. If there's not something else there, I'll say, what is the story? How did this happen? What's different now? And we go through that, and I get it from the broker. Then I get it from the client afterwards as well. I always verify everything a second time to make sure.
Yeah. So other than like the social distancing aspect of your business now, during COVID-19, has anything else changed in your business, would you say?
Other than the social distancing, and basically, as I said, I still go by the house. I still do it sounds very criminal, but I do a drive-by. You know what? I make sure the house is there first off. So that's step one. But I know I've done some in the past where, it looks great by the appraisal, and you drive by and there's a massive hole in the lawn. Like, what is that? That's not in the appraisal. So you find out a couple extra things, and you also find out a little bit about neighbors as well. Just because their property is great, their neighbors might not be, and it's not their fault, but it also might hurt the resale value of the property they're in, as you know. The neighborhood can make a difference for certain. But other than that, the aspect I have now is I'm trying as much as possible. If I don't do a phone interview, I'm doing a FaceTime or a Zoom interview with somebody if they're capable. Not every single one of my clients is real tech savvy, so sometimes phone interview is kind of where we get, but that's fine too. I did 7 years in a call center, so I'm pretty decent at hearing verbal cues on the phone and the change in people's voice when they answer questions, that type of thing. So I've heard quite a bit of that before as well. Other than that, really the only thing is that because a lot of the legal firms in town have laid off people or cut back staff, things are processing a little bit slower than normal. I mean, normally, you know, you've done deals with me before. A 1 to 2 week time frame is normally what it takes to get a deal done. Sometimes faster than that. We're looking at 2, 3+ weeks right now.
2 to 3 weeks, yeah. I mean, which is still not horrible, really, in the grand scheme of things.
No, I mean, it depends a lot on if there's an appraisal needed or if I've already gotten an appraisal. It depends on sometimes the client, whether they get their bills together, that's we're going to consolidate, that type of thing. So any number of things. And then, of course, good old property migration, which I'm sure most people are familiar with that as well. It can be a bit of a holdup at times.
Yeah, for sure. So sticking kind of on the COVID-19 and what we're dealing with now in our economies and stuff, why do you feel like this more than ever, I guess, is a good time to invest in as an investor, I guess?
Well, as an investor, there's a couple different things, and I'll say it's a better time in certain aspects, but it's also a time to be more careful. I know I've been doing a lot of pushback with my brokers who are sending me deals and saying, "Hey, this is great," and I'll look and I'll say, "Okay, well." For instance, I just had one a couple of weeks ago where the guy was a cook in a small town. Well, I'm pretty sure, I said straight to the broker, I said, I'm thinking his restaurant is probably closed. So is he employed right now? I'm taking a look a lot harder than I normally do at what the person actually does for a living. I always look at it, but right now I'm looking, okay, oh, they're a care worker. Okay, they're really busy right now. They're D&D, they're still employed. They've got, you know, hospital or government or fire or police, they're all still employed. They're all working as hard or harder than ever. So I know there's no lapse in income that way. If they're in a different type of industry, then I check and see, okay, are you still working? No, you're not. Okay, have you gotten your unemployment stuff yet? Have you gotten your CERB from the government? How is that being processed? And I follow that through. Because I am a big believer overall, and I wasn't always this, to be totally honest, but since I've been doing this business, I am a big believer that people want to pay their bills. Sometimes they run into hiccups they're not prepared to deal with, but by and large, people want to. So I'm the guy who's looking to see, okay, what are the hurdles that are coming up? What are the hiccups you're going to face? Do I think you're going to be able to get over them? And then I add that kind of extra level of security to what I'm doing now. And actually, it'll probably stick, to be honest. As I like to think that a lot of companies that are surviving what's going on right now and will survive are going to be much stronger when they're done. I'd like to think I'm going to be one of those. Hopefully, I will be. But I know I've learned some stuff already. And but other than that, the why it's a good thing right now. It's easy to say. But we've all seen what the stock market's done over the past 3 months, both Canada and US. You know, as I said before, there are risks involved in private lending. There are late payments. Anybody who's had one has had some. You know, usually, most often, if somebody's got a mortgage for 12 months, there'll either be 1 or 0 missed payments. If it's 24 months, a little more likely one will be missed. I mean, it's twice the opportunity. But that's a very small, you know, hiccup. It's, you know, a $200 or $300, $500 payment, something like that. So it's not dropping 20% in a day. And anybody who's invested in the stock market, and I have been as well, once you lose that 20%, it takes a long time to get it back often.
Oh yes.
This is something where if they miss a payment, a lot of times that payment is remade, and maybe you can speak to this, Greg, as well, because that payment is remade the next day. Sometimes it's a week or so, but very seldom is it a long period of time. And there's a NSF fee as well that goes along with that for the investor, which protects them from anything that happened in their accounts. And it also happened, it also prevents them from, inconvenience, that type of thing. So,
yeah. No, it is very seldom that we've had any missed payments over the years, but when they do, you know, they're back in. And I can attest to the stock market thing because I've invested, you know, before investing more heavily in private mortgages, I did a lot of trading, and right now I'm kind of going like this. I know how long it's going to take for those investments to turn around. So, yeah, I'm glad that I've diversified away. I don't say I'll ever not invest in the stock market, because I still think, it's one vehicle, one of many that are available to all of us. So take advantage of it. So, yeah.
Well, private mortgages or real estate in general can be a part, or sometimes, depending on how great the investment is, it can be your bond component to a balanced investment portfolio, because they are quite secure and steady. Whereas the market doesn't go like this. The market does go like that, I should say.
Yeah, precisely. So when people come to you as borrowers, not as investors, but as borrowers, what are some of the measures that are taking that by the end of the term, let's say it's 1 or 2 years, what measures do you take that they'll be able to exit that, and you'll be able to get that initial investment back, so your investor can then go and reinvest or get his or her money back?
I'll be the first to say that the best laid plans don't always pan out as far as time frame. What we do on the front end, and when I say we, the brokers that refer to me, the mortgage brokers that refer to me, I have a great small team of people who refer to me on a regular basis. Then I have a few that refer to me, a couple times a year, that type of thing. The few that refer to me on a regular basis, we have gotten down a pattern. And the people that I deal with, and a couple of them, are extremely good at what they do as far as preparing people to improve their credit. They put them on a plan. Here's what you need to do to improve your credit over the next 12 months or 24 months. Here's what will impact it. Here's what will impact it more. Here's what will impact it negatively, which sometimes doesn't get covered with some other people. And, you're doing all the right things for 18 months, and all of a sudden you buy a car. And then your credit's bad for another year, depending on what that purchase was. So there's definitely a plan on the part of the mortgage broker to start with. I also come in, and because I charge interest only mostly, I certainly do some amortization as well, and I've started to do a little bit more of it recently. But because I do interest only, it frees up some cash flow for them as well. So they're able to, if they have a couple bills that I didn't happen to pay off when we did the deal, or if they just simply want to get a savings plan in place. When you go to a bank looking for a mortgage or looking for a car loan or whatever it is, when you have a savings in your account, even $1,000, something like that, if you prove you can save, it definitely improves your score with the lender.
Yeah, definitely. So people who require lending, whether it be an investor or somebody, a homeowner that wants to, do some renovations to their house and get their house refinanced down the road and require some short-term lending, how do they find you? Like, how do they get to you?
Right. Well, as I alluded to a couple times, I have a good team of brokers that I work with on a regular basis. There are probably a couple hundred mortgage brokers in Halifax. And I don't deal with a lot of them, to be totally honest. I've got a great team of people who use me either exclusively or frequently. And they normally give me most of my business. Probably 90% plus of my business comes from a mortgage broker. And they get paid for the referral as well. I do get a few here and there from other contacts I've made in the business, either be a real estate agent or a lawyer, or sometimes I get it from repeat business from the same client who is investing in a new property, or I'll get it from someone who knew someone who would use my service as well. So, and I've also had investors who are borrowers and borrowers who are investors. So I've had people do both sides of the coin.
Yeah, I mean, in fact, Jenna and I have been on both sides. We've loaned some money out through your company, but last year when we did a flip, we did a larger flip, and we utilized private money. So there's on both. might sound weird, but every different investment may require a different strategy that'll work. And what I really liked about getting into it, and somebody mentioned it in the chat as well, is that to start, if you haven't, like, maybe you could say, what types of investments are can you put in for a private mortgage? Is it just cash, or is there other vehicles that you can use?
Yeah, that's a great question. You can do it through just cash. That's the least cumbersome, we'll say. But what a lot of people, especially in the the 15 to 20 years before retirement, most people will have a registered fund of some sort, be it an RSP or a tax-free savings account or locked-in retirement fund, that type of thing. Those are all eligible to do private mortgages. They have to be done through a self-directed RSP, and they have to be done through certain companies in Canada. The one I use, and I think, yeah, actually everyone who's dealt with me does use this company. I don't require it to be through this company. I gave everybody a choice. I do all of mine through this, my personal investing as well, through a company called Olympia Trust out in Calgary. They've been doing it with me, or I've been doing it with them, I should say, since I've started, so roughly 8 years. Very few issues. There's been a couple little hiccups here and there, but if you deal with any company for 8 years, you're probably going to see a little issue here and there, because it's hard to be perfect for that long. But their customer service is exceptional. So I've dealt with them on a regular basis, and I personally have one contact that I do everything through there. And if there's any kind of mess up in any other department, she looks after it. So my personal view is that the best thing you can use for this is a tax-free savings account. As most of you know, that when you put money into a tax-free savings account, there is no tax refund of any kind. That's the downfall, if there is a downfall. But every penny you take out of it is tax-free. So the money that comes out of it that was your principal, when you take it out down the road, that's tax-free. But different from an RSP is that every penny you take out down the road, no matter when, is tax-free. If you make a 35% return on your RSP, you're paying tax on that 35% when you take it out. If you make a 35% return on your tax-free savings account, you're paying 0 on that when you take it out. That's a big difference, especially if you compound these things over several years. You can double your money, triple your money. And you look at that, and 200% return over X amount of years, however long it may be, with no tax on it, that's a big deal.
That's huge. So Marty, my brain's going now. So like, if I was looking to invest in another property or investment, short-term mortgage or medium term, would it be wise for me to put the money, if I had cash available, would it be wise for somebody to put that cash into a tax-free savings account first? And then what would they have to do with it? Would they have to get it over to Olympia? Same kind of, or one of those types of companies?
Exactly. Another big one that you've probably heard of before is called B2B. They do mortgages themselves as well, but they also have an investment arm. They're probably the second largest one who does this in Canada. I personally don't use them. I've seen their things, and they seem to be quite good at what they do as well, and maybe even a tiny bit cheaper than Olympia, but I can't trade the experience that I've had there. But yes, opening up a tax-free is, in my opinion, again, because of that other aspect, that end. If you do it strictly through cash, we all know you're going to get taxed on it. That's, it's interest income. It's the highest rate of taxation you can get. It's like employment income. They're taxed exactly the same. It's not a dividend. It's not anything like that. It's not a capital gain. It's interest income. So that's going to be your highest rate of tax. So that just gets it applied at whatever tax rate you happen to be for your regular income. If you do it through an RSP, that's great. You're not going to take it out for quite a while. That is a benefit. So you don't have to worry about what it does in the short term. But you will pay tax on it someday. An RSP is not a tax avoidance system. It is a tax deferral system. And sometimes, being a former banker, I still don't think that is explained properly at banks or even by the federal government, to be totally honest. But I really feel that should be driven through people's head a lot more than it is. But with the tax-free, it is tax-free. It's exactly what it says it is. The only thing it shouldn't say savings account, because it should be called retirement account, because that's the best thing it's used for.
That's awesome. So that's great, because like, it's something new that I've learned tonight, that, as I start to expand, I've got some in RSP, some in cash, that's another vehicle that can help for your retirement.
Yep.
So
I basically, personally, I have investments. I have a locked-in retirement account for when I used to work at good old RBC.
Yep.
I have a regular RSP. I have a tax-free savings account, and I use cash as well. So I do it all 4 ways you can do it, basically. You can use, by the way, if anybody's interested, and I don't have anybody who does this. I know people who do it through different company, but RESPs are eligible as well. It's a registered account. You can use those as well. Some people look at it as like, oh, it's my children's education. I don't want to play around with it too much. Other people look at it, my child's not going to school for 12 years. So I've got lots of time for this to grow. So it's, it depends on your mind frame, and I would never talk anybody into using it or not using it. I'm just saying it's available.
Look, I mean, we invested in our child, our two girls, our ESPs, and with the stock market right now,
right.
It's lost a lot,
Yep.
and I think the amount of time that we're going to have to wait for their RESPs to recuperate from that loss is going to be, much longer than the risk that it would have been taken to invest it into a private mortgage.
Right. And one more thing to think about as well. And again, I'm not recommending this. This comes from my banking background. I am, and you'll be surprised to hear this, I'm risk averse by and large. I don't take a lot of big chances, anything like that. One thing that people do as well is to borrow or leverage to invest. I never recommend leverage investing. Again, it's my banking background. Play it safe, play it safe. But if you've got a line of credit at a low interest rate that you're not using, and you can borrow off it at 4% ish, and you get a return of 12, 13%, sometimes higher, those are pretty hard numbers to argue against. Yes, if something goes wrong and you don't quite get all your money from the mortgage, you still have to pay every penny to your line of credit. But that is, that's part of the risk involved with borrowing or leveraging. But the numbers are hard to argue with.
They are. I mean, everybody has to make that own decision for themselves. They have to evaluate their risk tolerance. Anybody who day trades has a pretty high risk tolerance. I know the times that I used to do a little bit more day trading, and I don't do that much anymore. I invest in longer term stocks, but, I felt like I was taking some pretty big risks and made some great gains, had some great losses. I mean, there's, that happens to everybody. So awesome.
The thing about, I will say about these investments, and any real, sorry, I didn't mean to cut you off, but any of these investments, they're not, your quote unquote, your sexy investments. They're not your investment that's going to get you 20% return in 2 weeks. They're not the ones you're going to watch every day. Oh, it went up. Oh, it went up. It's not that. It's a long term, longish term, 1 year, 2 years, that type of thing. But it's not something you need to look at every day. First off, as you know, you get your payment once a month or once every 2 weeks or whatever the payment frequency happens to be. You check that it's there and you move along. And that's really all you have to do with it.
Yeah, as being both a real estate investor and a private mortgage investor, I used to be depositing the rent checks at the beginning of the month was, my most exciting day. Now they're kind of balancing out. Like I'm excited because, it's just a little bit different. I love real estate investing. In fact, we just put an offer on a property yesterday, so we got it under agreement. But there's certain things I love about real estate. There's certain things I love about private investing. You're not fixing very many windows or roofs or things like that in private investing. But also I feel pretty good about providing housing for people too. So that's another benefit I get on that side, and a good return. And then, a longer term investment, longer term play.
On the cash side investments, it's nice to be sitting by a pool, having a beer when your phone dings. Oh, I got an e-transfer. This month's payment's in.
Yeah. So I probably know a lot of people are wondering, basically, why would anybody come to you to pay these high interest rates? Because people are probably thinking, wow, I don't want to be, you know, and even myself, when we first started investing, I didn't want to take advantage of people that were really
Right.
in need. But you
Mhm.
were able to help, you know, Jenna and I understand that better. Maybe you can explain to our listeners, you know, why does it make sense for people to come to you to borrow money?
Well, first thing I'll say, and this is easy for me to say, it's hard for anyone to see it happen because these deals will never come to fruition. So, as an investor, you would never see this type of deal. But when I look at a deal, if it's not right for the borrower, it doesn't happen. I've talked a lot of people out of deals. I've talked mortgage brokers out of deals because it didn't make sense for the borrower. The first thing I always do, because a lot of people try to refinance their student loans. Well, student loans, yes, their interest rates are not always favorable, but they have incredibly long repayment terms and they're generally quite low payments. So if I refinance those, a lot of times I'll increase their payments. So I always talk people out of that one to start with. But the other thing is that what nobody takes into account, because hopefully nobody here is using them. If you are, call me. But there's companies out there like Easy Financial. You've heard of them. Fairstone, which used to be, I think it was Wells Fargo, one of them. City Financial, I think they were Fairstone now. They have very high interest rates. They're not, I mean, we also have cash money and easy money and money and whatever they're called. But there's tons of those payday loan places out there. They charge right around 60% interest, just so you know, because that is the legal limit you're allowed to charge. So they charge right around 60. I don't think more than, I think once I've charged higher than 16. So there's a pretty good gap there. But your Fairstones that everybody goes to get a second mortgage on their home, that type of thing, they're charging upwards of 20% on some of these deals as well. So all of a sudden, when it's 12%, maybe 14 if it's a second mortgage, and interest only in a lot of cases, you're freeing up hundreds of dollars a month in payments, which can help you catch up on all your other bills, build your credit back up until you can get to a 3%, 4% bank. And sometimes the step for me is not RBC or TD. Sometimes it's a credit union at a higher rate. Sometimes it's the finance company at a 6% mortgage or a 7% mortgage until they can get a couple years after that a 3% mortgage somewhere. So there's a lot of times there's steps that happen as well. So it's funny. I've said this to people before, and you know I've had this question at parties and stuff like that. Well, why would anybody? What is your interest rate? And I'll say 12% plus. And I say, well, yes, that's because you don't need the money. If you did, I'm your best friend. And I said that to a client this morning, and he agreed 100%. He says, yes, you're doing me a favor. You're helping me out. I know you are, because I see what my payments are right now, and I see what they'll be with you, and they're a heck of a lot better. So,
Yeah. So in fact, you know, you're saving people money. You're actually bringing them out from a really bad situation to a medium term situation, on the road to a fixed situation. So really, like, your path is part education, part of solving a problem, and then here at the end of it, wow, you're back on track all of a sudden, which they could have been in that rut. Because you're right, those payday loans and different companies like those sorts, they really keep you in that trap. It's like the credit you'll never get out of because it's not built for you to get out of.
exactly, exactly.
You know,
And the whole purpose of what I do is to get people out in 12 to 24 months. That's the whole point. I don't want to, I've discouraged people who call me and say, listen, I want to buy a house. It's my first house and I don't have a down payment. And well, first off, they don't qualify for my product anyway. But I said, listen, if you're just buying a house, you do not want to start off buying a house at a 12% interest rate. That's not a good way to start your life. So I've talked several people out of buying a house through me. So
yeah, that's awesome. Because I mean, for me, it's great when you bring an opportunity to me or other investors that you know, and we're able to help them out of the situation they're in. But it's also really nice when they are able to pay off the debt that they've loaned because that means they've actually done exactly what they were meant to do. They bridged a problem and solved it, and now they have a solution and an easier path on the other side. So,
well, I've had a situation as well, and this certainly isn't every situation. Some of them are very cut and dry. Some of them are I spent way too much money and I need to pay it off. So those are some of them. And honestly, when somebody says that to me, I was stupid. I shouldn't have done X, Y, or Z. That's a good start when you're talking to me. You took ownership of it. You're the person responsible for what you did. You're not blaming everybody else. That's step one to getting a loan from me. But you were part of a deal where we were able to save a guy from getting his house foreclosed on in a 2-week period over Christmas.
Yeah, we did. That was pretty awesome.
That's probably the best deal. That's probably the best deal I've had in 8 years of this. I've had some other good ones as well, but that one, and he's called me back since. His son is just turning 18, and he's looking for ideas on how to invest his money now.
That's fantastic.
Yeah, so
that's why we do it.
You bet, no question. No question. I also do it to eat, and you can't see my stomach, but I do enjoy it. But
So, to transition into my next question, what is the success rate for these mortgages? Because I know, that's probably a question that's lingering with a lot of people is, how many defaults are there? How many missed payments are there? Like, what is the success rate since you've been doing this over 8 years?
Well, I'm proud of this, and I don't like talking about it. And both in the same vein, I guess, is that so far it has been 100%. No one has defaulted on a mortgage. Some people have fallen behind on payments. Some people have fallen quite a bit behind on payments, and we managed to massage them through the situation and get the money out the other end. I've had pretty much every situation you can think of. I won't say every situation because something will happen tomorrow. But I've had a house burned down while I had a mortgage on it. I had a house burned down just after I had a mortgage on it. I don't know if I'm bad luck or not, but I also had a client sadly pass away while I had a mortgage on their house. So there's been a lot of different scenarios that every penny hasn't gotten back out at the back end. Sometimes there's a little bit of nervousness for me as well. Even though sometimes it's not my money, trust me, if I invest your money, I'm a lot more nervous about what happens to your money than what happens to my money. It's just who I am. But it is 100% so far, and I will tell everybody who's listening, it will not stay at 100%. Something will happen sooner or later. Like I said, I put in a lot of work at the front end to qualify people, to talk to them as human beings, to get an idea of who they are, not just what their financial situation is. I learned a long time ago, there's a thing called the 5 C's of credit. One of the things is capacity. Are you able to pay? Well, that's a great one, except for the fact it doesn't matter how much money you have, and if you're able to pay, it's whether you're willing to pay. That's the one that's by far the most important. It doesn't matter how much you have if you're not going to use it. So I look really hard at character for one of the C's. What do these people do? What have they tried so far before they came to me? Well, you know what? I just sold my truck to pay off some of my bills. Hey, that's a great step. That's a step in the right direction. You're willing to work. You're willing to do what you need to do. That gives me a lot more credibility that the person's going to pay my mortgage as well. But no matter how much work I put in on the front end, I can't stop somebody from getting sick. I can't stop somebody from losing their job. What I can hopefully do, and the brokers that work with me as well, is put these people in a better situation. So if something happens to them in 6 months or a year, they're a little bit more prepared to handle those things. Their payments have gone down. They might have saved a little bit. I have people say, well, I can pay $700 a month. Well, you know what? Why don't we keep that at $550 a month? You can build up a little savings in case your water heater goes or whatever it is. That way they're prepared. They're not having to borrow more money down the road. It just keeps things a little safer for everybody. And honestly, it's partly protection for me as well. It's more likely I'm going to get paid the proper money if we stretch it over a slightly longer term, make the payments a little lower. It's easier for them to do, so it's easier for it to happen.
Yeah, that's fantastic. And I mean, it's just like real estate or investing in real estate, and you have tenants, You may not have bad tenants. You may have never had a bad tenant. You will have a bad tenant.
Yep.
Actually, it happens to everyone, and everybody who's on this call now who has tenants is going, yep, I can feel them nodding. Yes. Right. Because they have to experience, but that's an opportunity to grow and learn for the next one. Right. Because when we, then we, like you said, the next time you look at it slightly different.
I can say too, we tie it back into COVID a little bit. We've been going through this for several weeks now. We're in our 2.5 months-ish since things kind of kicked off, really. I've only had, out of 28 mortgages that Phoenix has helped out right now that we have out there currently, only 2 people have even inquired about missing a payment, and no one has missed a payment yet.
Congratulations.
I'm very happy. I'd like to say proud, but may have been me, it may not have been me, but very, very pleased with that situation, I must say.
Yeah.
I'm not saying somebody's not going to miss in another couple of days. We'll see, but so far so good.
Another thing I really like about, so I started, Jenna and we started using our RSPs, and you spoke to it earlier that you said, I worry more about other people's money than my own, which I can attest to. You're very careful with the opportunities. By the time they get to me and Jenna, they have been vetted. I can look over the sheets and see the situation. But what I really liked at the beginning, that made me feel super comfortable about investing with you is that you were actually still willing to put your own money in every single deal that has ever come. So that gave me an assurance. So if somebody's like, well, this is a lot of risk, it's my first mortgage that I loan either an RSP or cash to, you are always willing to step in and top it off or do half. And that speaks volumes for a small business and somebody who's been successful. There's a reason why you have 100% success rate. You're very good at what you do.
Thank you.
Yep. So I saw a question pop up on the side here, so we're going to start to get into some of the questions. I asked some of them as we were going through. So if anybody else has any questions, now's the time. You can raise your hand or put it in the message board here on the side of the screen. So we did have one question come from Scott and Eddie. Can you transfer from an RSP to a tax-free saving account without paying a withdrawal tax?
Good question. I'm going to start this off by saying I have been in the past, but I am no longer licensed to give financial advice. Okay. I don't work for a bank anymore. I will certainly give you my opinion on that. And this one I do know, it's no, you cannot. You do have to pay, if you take it out of the RSP, you do have to pay withholding tax, and then the rest will be taxed at the end of the year as your income. Unfortunately, it's just because you got the tax break on the way in, you have to pay the tax on the way out. That's all there is to it. You can transfer from an RSP to a different RSP at a different company without paying any tax. You can invest in a mortgage without paying any tax because the money doesn't come out of the RSP. It just moves to a different spot in the RSP. But as far as withdrawing it completely, unfortunately, no, you can't.
Okay, that is a great question because I was kind of thinking the same thing. How you can transfer. So basically, you would be taxed at your current tax rate as a
exactly. It depends on the amount you take out. If you take out, if I remember correctly, and maybe somebody can look this up, don't quote me on it directly, but I think if you take out up to $5,000, you pay 10% withholding right away. Then the remainder goes as your income for the rest of the year. If you take out 5 to 10, I believe it's 20. And it might be 5 to 15 is 20% right away. And then the rest goes on as your tax at the end of the year. And if you take out anything above 15, I think it is, you pay 30% right off the top. And then the rest goes as income.
Yeah. So you got to think about that really big before you make that kind of
for sure
investment. All right. Does anybody else have any questions out there for Marty? We're gotta see if we have anything else.
And I know, aside from yourself and Jenna, there's a few other people on the call that have invested with me. First off, thanks everyone. I appreciate all the business I've gotten and the great word of mouth that you guys have spread around. I know a few of you have talked to a few other people who have gotten me some business as well, and I appreciate that. it's a big growing business for me for sure. I had a while back mentioned to Greg, the spot when I started the company, how much I wanted to have out in investments as a whole. I won't share the number, but I'm above that now. I'm still going strong. We're chugging right away, I must say. So I'm very pleased with the progress the company has had, the great people I've gotten to work with as investors, brokers, and borrowers as well. I've met some fantastic people as borrowers. The old saying, the salt of the earth. I've met a lot of people that just had some problems. If there's ever a good reason to get into financial difficulty, it's illness in the family. And I have probably over the years, probably 15 to 20 different families who have had an illness of some sort in their family and got into financial difficulty because of it. And being able to help those people out has made me feel pretty good. I'll fully admit it.
Yeah, when you can do things like that with your investment, the reward is definitely there.
Yeah, for sure.
Yeah. But what you guys should all take from this, I guess, is that there's many different vehicles to invest. You shouldn't pigeonhole yourself to one. You should find a few that you're comfortable with. Diversification. If it wasn't for diversification in Jenna and I's portfolio, we'd probably be having a little bit of a harder time because once you start diversifying, you find what you're good at. You also leverage your risk a little bit more. So people often ask me, investing in mortgages or properties or different things, you must have a pretty high risk tolerance. And I probably have a little bit higher than the average person. But I also study the investment deeply. And, Jenna can attest to that. I have my spreadsheets, I have the research, I snoop, I dig quite a bit before I invest in anything. So, I'm not as high risk as people might think. But I've absolutely loved that we've gotten into. And in fact, it's going to be a big part of my retirement plan is to invest in that kind of passive income, because like Marty mentioned earlier, people are apt to pay their bills. They are kind of driven, especially when they own the asset. So, a little bit different from a renter, if they miss their rent, especially during times like this, there's not the potential for them to lose their house. In fact, they're being told they cannot be evicted, which I agree in, but a person who may lose their home, it's a different story. They have a better vested interest. And a lot of the clients that Marty's taken on that's brought, to us, they have care of ownership. They have good goals, they want to fix the situation. So,
yeah, that's the only thing really that I'm sad about right now in COVID times is that I'm not able to go sit at somebody's kitchen table and chat with them. That's been some of my, I've turned down a deal mentally. I didn't turn it down immediately with the person, but I've turned down a deal 3 seconds after walking in their house, and vice versa. I've had a couple deals where I've been on the fence. One where probably most of Leanne Miles. I don't think she's on the call, but she may be listening in later. Leanne has helped me out tremendously in my business over the years. I went to a deal as a favor to her. The numbers looked terrible. And I sat down at the kitchen table with this woman who, not giving away too much, but she had 4 children and she was widowed. And she was in pretty tight situation. And I really didn't think there was anything I could do for her. I sat down with her for an hour and I looked her in the eye. I said, I'll tell you the truth. I came here as a favor to Leanne. After talking to you for 45 minutes, I know there is no way in hell you're not going to pay me back. And she has been one of the greatest success stories we've had. She got out of her mortgage about 3-4 months ago. God love her. She did a little testimonial to both Leanne and I on Facebook. She was sitting in her car crying and she did it while she was going in to sign her new mortgage. So that type of stuff. And that works for all you guys who are investing in real estate itself as well. Those people where you go to talk to them. If you haven't talked to everybody yet with the uncertainty around COVID, I urge you to make a couple more calls, or, well, you can't really show up, I guess, at their door anymore, but, make a couple more calls, let them know you're out there. The personal touch that I've been able to give, I do truly believe has saved some of the investments. I had an investor who has a second mortgage, sorry, a borrower who had a second mortgage. They were missing a fair amount of payments, and I called them. I had met them originally. I called them. We had a good heart-to-heart on the phone. I said, you really have to decide, where you're putting your money. If you stop paying your second mortgage, at some point you will lose your house. So they caught up. They were making all their payments. Then I found out they weren't paying their first mortgage.
Oh, no.
They weren't paying the bank anymore. They were paying the second mortgage, but they weren't paying the bank. So I called them and I said, listen, first off, thanks so much for paying me. I said, I really appreciate it. I do have to let you know that if you stop paying the bank, they will also take your house. But the little personal touch made them change from paying the bank and not paying me to paying me and not paying the bank. So the personal touch definitely has its place in this business.
Yeah, I don't think too many people from the big banks are going to be sitting down in anybody's living room.
Exactly. Yeah.
No, that speaks volumes. Well, listen, Marty, this has been fantastic. I learned more. I've been doing it with you now for, since day one, but I've learned more again through this conversation. You've been a great friend, a great business associate, and anybody who wants to learn more, hit up Marty. Marty, where can they find you, or where can they get some info, email or text or Instagram? Or
I'm not an Instagrammer. Sorry, I'm not that cool. I don't do TikTok either, just in case you were wondering. But I definitely have a website. It's phoenixfinancialinc.net. You can find me. Greg knows how to find me for sure. I'm also, if anybody wants to jot it down now, 902-225-4575. Catchy, isn't it? But it's been a great experience so far in this ride. I've done over 20 years in finance up to this point. A lot of it with big banks. Well, most of it to this point with big banks, and they were fantastic. I have never gotten the sheer enjoyment out of my job until I started doing this. I enjoyed a lot of what I did previously. I enjoyed working in RBC. I enjoyed working my short stint with TD. It doesn't touch this at all. The ability to help people out on a regular basis, the ability to help people get more out of their investments. My day to day, there's headaches. Don't get me wrong. I'm a one-man band, so when something goes wrong, I have to fix it. But I do like the responsibility of that at times as well. I fix my own problems. I don't have to worry about somebody else's. And the joy I see when I'm able to help people out, even when I talk to them on the phone, the relief in their voice, just kind of get you right there sometimes, I must say. So thanks to everybody again here who supported me. Anybody has any questions? I see that Luciano was nice enough to put up my website. Thank you. But if anybody has any questions, I do have a Facebook page as well, and I'm in contact with this group on a regular basis. So thanks to everyone.
Thank you, Marty. So we're going to tune out for now, guys and girls, and thank you very much for joining. Thanks again for joining. Thanks again, Marty. Fantastic chat, and I look forward to catching up with you all in the future soon.
You bet. I want to have a beer with every single person on this call when we're allowed out.
Sounds good. I'm in.
Awesome.
Okay. Good night, everyone.
Thanks, guys.